Welcome to StockMarketPending.com, 3:35 p.m. Pacific Standard Time. Today's date, 12/6/2011. We have this wonderful company called, the symbol is WMB, Williams and Company, Inc. One of the things that was brought to our attention by Brian Plain was some very extraordinary activity that even in all of my years doing this, I haven't seen. And what we're going to reveal to you is an option trade that we find very, very alarming in a lot of respects for shareholders. Because generally, when you see what we're going to show you, it ends up going bad. And I look at getting short the other side. So here's the chart. We're approaching 52-week highs. Great. The last sell-off got down to 22, made a $10 move. As far as the technical goes, they're all looking good. We're overbought in the short term. But outside of this daily chart here's what we're going to show you. We are going to show you a $17.50 call option that had a record volume of so you got 3,609,002 contracts. They are a $17.50 strike price that will expire on 1/21 of 2012. That is one discovery for you. The other one that we felt was quite important was 1/21/2012 $20 call with 2,293,500 contracts traded. So, for the sake of argument, we will put in here on this screen, right here and now, is the combined total of the $20 call, the one that we just showed. If you add the two together, you come up with a remarkable amount of contracts. Mind you, that both are deep in the money. The $20 call is $12 in the money, and the $17.50, well, it's almost half. I mean, it's extremely. Why would anyone want to buy this size is beyond our comprehension. There has to be something behind it, and we're going to do our best to bring it to you. So I'm going to put Brian Plain on here, and he's going to explain what the math is. Mr. Plain, go ahead.
Yeah, one of the things that I first noticed was that 1750, and when I first noticed the volume, I think it was like 700,000. I'm like, what? I've never seen such a deep in the money random trade like that. By the end of the day, it was 3.6 million, and just based on the closing price, the dollars traded would be about 5.2 billion. And the change in open interest would be 72 times what was there if it was a buy. If it was an actual buy, if it was a short, it would be the same. But it was 49,825 prior to today. And the $20 call, that thing traded 2.2 million. I've never seen this much volume. And when I added up these three strikes, the 1750, the 20, and the 2250, the total shares, if somebody actually did purchase these and exercise
them. Wait, excuse me, I don't mean to interrupt. I didn't put the 2250 in here originally. So now we have a 2250 call with 900,000 contracts that are deep in the money. So go ahead.
Yeah, and the open interest on the 20 was 33,624, and the change, if it was a buy, would be 68 times what that was before.
68 times what?
33,000.
Okay.
So we'll see what it nets out in the morning. But if you added up the total dollars traded between the three strikes, it's about $8.9 billion. The market cap of the company is $18.94 billion.
I wonder, by them buying this much, I wonder if it's an insider that potentially would have converting this into shares would potentially have a big ownership stake in the company.
Well, when I actually did the math on that, if somebody actually netted out all three of these contracts, it would be 680 million shares, and the total available, less than more than the float is 587 million, and this would be 680 million.
So
A
what you're
difference of
saying,
92.9 million
okay, so what
more.
you're trying to tell the users and the people around the world is that the shares that are outstanding available to trade on a daily basis that is issued by the company is that the purchase of these contracts, if they were to execute it, there isn't even that many open shares on the market available in the share count float. Is that correct?
That's exactly right, and that doesn't even include like 77.3% institutional ownership or 0.27% insider ownership.
Okay. So basically, either this company is a potential M&A, merger and acquisition target, there is something behind the purchase, and or a big insider can gain that much control of the shares outstanding. Well, they actually own a big percentage of, well, there isn't any float left of the shares outstanding. That means that the company would have to release preferred stock that they own to cover the outstanding float on this.
The other thing that's interesting to note is that there's a WPX Energy that's going to be a spinoff of this company. So the shareholders of WMB will get shares in this new company.
Okay. Is that other company traded publicly?
On or about December 12th.
Is when it came publicly?
Yeah, it's not here yet. It's about to. So
so they got an IPO pending.
Yeah, well, it's actually done as a spinoff and not an IPO. They were actually going to do it as an IPO, and then they said, due to volatile market conditions, they would prefer to just do it as a spinoff. So they're going to basically reward the current shareholders and or people that own the stock, like the people that could potentially exercise this with these shares. The question comes into play is, if they exercise more than all the shares available, how many shares of this new stock are they going to get?
Well, yeah, we'll have to find out when that goes or when that spin-off happens. All I can tell the users and the people here at MMT status and regular normal folk is that not only did they buy 3.6 million, 2.2 million, and just rounding it off 900,000, is that yes, they own it. But here's the thing: if I'm buying a $20 call, and let's say I bought 2,293,500 contracts, well, yes, I own it at the $20 call strike in my portfolio. But what people don't realize is that you got to add, if it was bought at, most of it was bought at $12. So you take the strike price of the ownership of $20. That's what you own it for. Then you got to add the cost of premium. So you add another $12 on there. That doesn't sound well, because that means that the stock itself, and you can see the call contract up here, they're totally inflated. I mean, hey, if you were going to buy that many contracts, why weren't you buying them down here at $2? But my point of it is, on WMB, is that the ownership, if I wanted to, why do I, it doesn't make sense. But that doesn't mean that big money makes sense. Because if you take the $20 strike price and you add $12, that's $32. That's right up here where it is. Why wouldn't I just simply go buy 2.2 million shares? I still have the same price. Look, for people that need to understand options and whatnot, we're not going to go into that in a video. But the thing about it is, you got to take, you own it at $20 and you own it down here at $17.50, because that's the strike price that you bought, and it goes in your portfolio that way. But then you got to add $17.50 So you own it at 17.5 plus 1460 is how it works. So plus 14.60 equals 32.1. And why wouldn't I just simply go out on the open market or set it up with a market maker on the floor of the exchange? And from an institutional side, I would just buy all my shares. Why would I want to go? Because I own it right here where it is. If I exercise it, the stock, and anything can be exercised into ownership, is that it doesn't make sense unless there is a potential buyout or someone is trying to get control of the company, and or if private equity is going after the company and an institutional investor wants to take over the company. That's what I have to say about the math, which why would I not just buy my shares on the open market? Because what can happen is that $20 call, if this thing was to go below $20, they're going to lose all their money if it was to close below 20. And if it closed below 1750 on that strike date, they lose all this money. They can't exercise anything. So once again, it's a big money volatility trade. Thank you, Brian Plain. Is there anything else I need to know?
Yeah, I just, I took pictures of the screenshots of all these transactions on the end of the day, and it wasn't, light volume, your mom or pop IRA account.
No,
these things, 565,000 contract lots, 2 in a row, and before that there was 200,000s in a row, and this was on the 1750 that traded the 3.9 million, and these are all at 14.65.
All right, so on the why don't you include that update with this video, your screenshot, so people can see where the volume, if they're visible. Once again, it's been a pleasure bringing this discovery that there is something big behind WMB.